Hey guys, what's up? Spenny here. So in today's video, I have two high growth stocks, and I think you guys are really gonna like both of these stocks. They're both benefiting from the macroeconomic environment in the world right now, and they're both very future-proof. They're gonna be benefiting from this environment over the next 10, 20, 30 years. They're not in dying industries. I personally really like investing into the future, and I think both of these stocks represent an amazing opportunity. So let's dive straight into this video. Okay, so before I dive into these high growth stocks, if you guys could drop this video a big thumbs up, it really helps out the channel. And as always, make sure you subscribe to this channel if you're not already subbed. I cover stocks 7 days a week, and I like to find the best opportunities in the market. This is what I do all day long. I'm researching 12 hours a day, and we're doing pretty good on this channel so far. Every stock that I've recommended has been up massively. So go ahead, hit the subscribe button, and let's go with the first stock pick of today. So the first stock pick is a stock I've mentioned before on this channel, and it's Beyond Meat. And the reason why I want to mention Beyond Meat again is because a number of you guys has addressed certain concerns with the company. So I'm going to be going through those concerns and completely debunking them, at least in my opinion, debunking them. I think you're going to feel very confident with this stock after today's video. So first thing I want to show you is the chart. So this chart represents the last year, and I want to go through the cycles of this stock so you understand a bit of its history. So just over a year ago, they IPO'd, as you can see at the start of this chart. Then they shot up, and then the CV health crisis really took off in March, and the stock plummeted, just like every stock in the market did. And then since then, they went on a massive rebound and climbed to a high of $200 a share. However, from that $200 a share, they dropped down to about $126, and this is caused by a McDonald's deal. So there's a lot of confusion going on with Beyond Meat if they actually have a deal with McDonald's or not. People aren't quite sure what that deal is looking like right now. So it caused it to sell off, and now we're trading right around that $140 mark. And in my opinion, this is still a very good price to buy into. This company is going to benefit so much in the future just with the whole macroeconomic environment. And let me kind of show you guys what I'm talking about. Really, it's just at the beginning of its growth phase. So there's a number of things really going right for this company. Number one is that they're entering into China big time. You can see here, Beyond Meat is ramping up production in China as plant-based products continue to infiltrate global markets. And this is just gonna represent a massive opportunity for Beyond Meat. So that's one growth driver. A second one is they recently got a deal with IKEA. So they have two plant-based meatballs selling at IKEA now. And obviously IKEA has stores all over the world. They're a very massive chain. So that's going to really help boost revenue as well. And then the third thing is that they actually just scored a big deal with Costco. And I'm sure you guys can only imagine how much revenue potential is here. Costco is a massive chain. So I'm super happy to see them get in with Costco. This is really game changing in my opinion. Beyond Meat just seems to keep on getting contracts over and over again. Costco, IKEA, China, McDonald's. I mean, the contracts keep on coming out. So this stock I think is really going to impress people over this next year. So now I've shown you guys what I like about Beyond Meat and some of the good things they have going for them. Let me show you your guys' main concern that you've addressed to me. So most of you guys are concerned about Beyond Meat's price and that they need to become cheaper than meat in order to be competitive. And I agree to this to a certain extent. You know, if Beyond Meat can't bring down its prices, and if meat is always much cheaper than Beyond Meat, then I think that's going to really limit their potential. And most people don't believe that Beyond Meat can get there. However, I actually think this is just inevitable. Beyond Meat is going to be cheaper than your typical meat in the grocery store. And so let me show you why that is going to happen. So in this article, a World Economic Forum white paper on the future of protein said demand for meat will double in the 50 years to 2050 and called producing enough a significant challenge. As well as cultured meat, other alternatives include insect-based and algae-based. So this is just a simple supply versus demand equation. If demand continues to increase, the price of meat is going to increase with it. And that's because we only have a limited amount of supply. We only have so much land where we can actually farm meat. So we're actually going to see the price of meat substantially increase over the next 30 years. And this is really going to help with that price competitiveness, because obviously Beyond Meat doesn't have meat in its products. It's more pea based, and peas don't have a supply problem. It's very easy to produce more peas. However, it's very hard to up your supply in meat. It takes a lot of land and resources. So this is one thing they have going for it, is that meat is going to increase in price. Meanwhile, Beyond Meat's products shouldn't nearly at the same rate. And then if you read this article here, the beef index increased 10.8% in May. It's the largest ever monthly increase. So we can already see meat is substantially going up in price, far greater than vegetables, especially peas. Peas are not going to increase with inflation nearly as much as meat. So that is basically most people's concern with this business. However, I don't really think it is much of a concern at all. The macroeconomic environment is going to work itself out. Beyond Meat will be cheaper than meat one day, and this isn't even to include all of the different distribution channels that Beyond Meat will bring out in the future, which will then lower the prices over time as those supply chains and everything become better and better over time. It's just inevitable. Beyond Meat will for sure be cheaper than meat. So that's my first stock for you guys. Let's move on to the second one. This is a really interesting pick. I actually got this pick from the Motley Fool. They did a really good article and analysis on it. So here we go. Let me break it down for you guys. So the company is Fastly, and this is a tech company. Very interesting company. I really like what they're doing, and I think again, this is another company that's just going to benefit from the future. Very future-proof company, which I like to invest in. So Fastly is a global content delivery network that makes apps and internet itself faster, more reliable, and more secure. So why should you buy? In the cloud era, speed matters, and Fastly makes the sites of major brands deliver fast. Its developer-led team is highly engaged, with co-founder Artur Bergman owning 7.9% of shares outstanding. Even if its growth slows some, the potential over the next decade is such that multi-bagger returns are entirely reasonable to expect. So this is a very high-growing tech company that is involved in making the internet faster. Very interesting business model, and I can definitely see this being important in the future. So moving on further in this article, says here, speed, security, and reliability are table stakes for successful business in the 21st century. In a world of over 4 billion internet users, roughly 57% of the world's population, how well businesses serve online visitors will have a material impact on their results. Fastly's CDN optimizes storage for serving customers at the moment of their greatest need. With the volume of corporate data doubling every 18 months to 2 years, it's reasonable to think these customers will become even more dependent on Fastly in the future. So definitely some very compelling points in that last paragraph. And to their point of companies needing them even more in the future because of the doubling of data, well, clearly we already are seeing the result of that, because in this here, we can see the dollar-based net expansion rate is 147%. So this means that customers who are already using their service are spending more money year over year. So let me give you an example of that. Hypothetically, let's say Shopify, a Fastly customer, spent $700,000 for the company's services last year. DBNER of 147% implies that total is north of 1 million this year. So this retention rate of 147% basically means that their existing customers are paying more money year over year for Fastly's services. This is a very powerful business model, and if they start really expanding their customers and their existing customers spending more money, the growth is going to be enormous in this company. So yeah, some really good things going on with this company. I really like that they're making the internet faster for companies. I find that quite unique, and I can see it playing a big role in the future. The internet is still kind of in its infancy. It's only been around for just over 20 years. And so as data becomes bigger and bigger, we're going to need this service, in my opinion. So I think Fastly is another one of those companies that can really take advantage of the future. Now let's get into their financials, because this is very important. It's almost just as important as the business itself when you're buying a stock. So this company has grown quite a bit over the last year. You can see here in 2019, they had a market cap of 2.25 billion. Now today, that number has moved to 9.57 billion. So there's been a lot of price appreciation over the past year. However, in my opinion, there's still lots of room to run here, but you just gotta be aware it has appreciated quite a bit. You're not buying at an all-time low. And another thing to note is that a year ago, their price to sales ratio was only 13. Now moving forward to the current sales ratio, it's 33. So this is nearly 2.5x as well. So you're not getting that nice 13 PS ratio. 33 is a high PS ratio, but it's actually not unreasonable for the stock. Let me show you why that is. According to Analyst, next year they're expecting Fastly to grow at 31%. So normally if you have a PS ratio of 30, you want your company to grow at least at a 30% rate on an annualized basis. And Fastly is coming in right around that number. Of course, I don't really know how well these analysts are going to be able to predict this company's revenue growth. I would personally be thinking that this company will be growing at a 40 to 50% annually. However, if they do maintain that 31% over the next 10 years, I mean, that would be massive. This company would be looking extremely cheap. And because of just the environment they're in, I think they can actually maintain that growth rate of 30% over the next decade. I don't think that's unrealistic considering what they're doing. And another thing that's really nice about this company, you have no risk of bankruptcy. They have 402 million of cash and only 32 million of debt. So this is really limiting your risk with this company. You don't need to worry about bankruptcy, which is really nice. And really the only thing you need to actually watch for is if the service they offer is successful. As long as Fastly's service is necessary and companies require it, then this company is going to be wildly successful, and we should easily be able to maintain that 30 to 50% growth rate over the next decade. Okay guys, so those are the two high growth stocks I have for you today. I really love both of these stocks. I think that they both benefit greatly from the macroeconomic environment, and they're both in industries that are expected to grow massively over the next 10, 20, 30 years. I think that they both provide services and products that are necessary. So let me know in the comments down below what you guys think of these companies. Personally, I am invested in Beyond Meat right now, and I'm looking to add a position into Fastly. I would love to see a little bit of a drop in its share price, but either way, I do think that you can't go wrong buying right now. When you're looking at Fastly 5, 10 years from now, I think that you're gonna have a huge multi-bagger on your hand here. So yeah, anyways, that's all I have for this video, guys. Make sure to check out the links down below in the description. I have a Webull link where if you sign up using that link and deposit just $100, you'll get 4 free stocks. So make sure you check that out if you haven't already. And thanks for watching till the end. I really appreciate that. I'll see you guys in the next video.